Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema and Hormiz. It's a Monday morning which is batting for the Bulls, and it's, I think, the third consecutive day of gains that we are seeing on the Nifty. The week has started on a strong note. We are very close to that 25,000 mark as well, just 15 points away from that. The mid-caps are doing well in line with the benchmarks. Bank Nifty is the one which is powering through 0.7% higher on that index. We have been getting a lot of quarter two updates, very close to the earnings season as well. We start on 9th of October with the big IT name. Across the board, actually, we are seeing some good gains come by. If we talk about the small cap index, that's doing well. I spoke about banking index that continues to be on the front foot. IT is the other one. Of course, Reema will talk about that in greater detail. But looks like it's a good start. We'll have to see whether that continue in that direction or not, because Friday we did see market close at the day's high.
Yeah, it's the twin engines of banks and IT performing. And for banks in particular, while TCS will officially kick off the earnings season on Thursday, 9th of October, post-market hours, we've got so many quarterly updates, right? And I think the thing that stands out from the banking pack is that the loan growth is fairly healthy. For Kotak Mahindra Bank, 16%. For HDFC Bank, about 10%. So, loan growth is healthy, and I think that's providing some cheer to the banking stocks on the whole. And TCS, of course, has been a rank underperformer on a year-to-date basis. The Nifty IT index has underperformed the index by nearly 25%. So is the worst now in the price? Will this quarter see an end to the earnings downgrades? I think that is the question on everyone's mind. Recovery is elusive as of now, but at least will the earnings downgrade come to an end? But let's talk about individual stocks. That's the big picture, Hormiz. Banks, IT doing well. On the flip side, metals, PSUs, pharmas are a bit subdued. But what about stocks?
Almost every company that has come out with business updates on Friday or over the weekend, right? And some of them are reacting to it as well. And Avenue Supermarts is one of them. It came out with the updates. Brokerages is not very optimistic, at least those that we read since the morning. And at the lowest point of the day now, 3% lower on the stock. And the stock has declined on substantial volumes as well. It's the fourth straight day of losses for Avenue Supermarts. And if you take a look at the volumes as well, it's on a fairly high volumes that the stock has declined. You had 3.5 lakh shares that have been traded compared to a 20-day average of just 80,000 shares. Now, also for the fact that the 100 DMA is broken below that level now, 4327 is the 100-day moving average, and it is trading below that level for is Avenue Supermarts. The 200-day moving average is further down. Now, the other one, of course, on the downside is Hemisphere Properties, the worst performer on the small cap index, as the biggest single day fall that the stock has had on record. And you take a look at the number of shares as well, right? 70 lakh shares have changed hands today. 20-day average here is only 7 lakh shares. And the important levels on the downside, the 50 DMA is broken below that now of 150, and the 100 DMA comes up next, which is at 144. Hasn't done much this year, hadn't done much last year as well. So the 2-year returns for the stock is almost zero if you take a look at that. Now, the other one being Onward Technologies, that's the third one on the list today. That's on the upside though, bucking the trend of the other two losers. Third best performer on the BSE small cap index today. Is the third straight day of gains as well for the stock. The volumes today are already at the highest level since June, and we have had almost 2 lakh shares traded on this stock. The 20-day average here is only 5,000 shares, so significantly high volumes, broken well above its 50-day moving average of 321, and as a result of which it's moving above all of its key moving averages. The major story of the day, of course, being the hospital names. A slew of reforms being announced for these hospital stocks, and Fortis, of course, being in the news for its open offer as well. You take a look at the volumes at which they are moving. 19 lakh shares on Fortis, 3.5 lakh shares on Narayana, almost 30 lakh for Max Healthcare as well, and significantly above it's a 20-day average of close to 4 lakh, and almost 4 to 5 times higher as compared to their 20-day average. Back to you guys.
All right. Thank you so much for that list, Hormiz. Some interesting names there. But we have to talk about the big banking updates that have come by, pushing the Bank Nifty higher as well, and a lot of fundamental analysis there as well. Gaurav is joining us with that now. Gaurav.
Well, let's talk about HDFC Bank, the biggest private sector bank. Now, it seems that HDFC Bank is actually proving what they had said earlier, that in FY26 they will be moving in line with the market. So the advances growth that has come at around 9.9%. Remember, the system level growth is at around 10.4%. So it seems that HDFC Bank is picking its pace with the system level growth. Remember, this also reflects around 4.4% growth on a sequential basis, which is actually healthy. On the flip side, deposit that increased by 12%, that is also higher than the system growth. And at the same time, when we look at the sequential growth, that was at around 1.4%, and that is the reason why CD ratio that actually increased almost to 98.8%. Now this was a bit of a concern because management earlier said that they want this to come at around 85 to 90%. So definitely we'll watch out on that. Let's talk about Kotak Mahindra Bank now, because here also we saw a good set of numbers. Advances that increased almost by 15.8%, and deposits that also increased almost by 14.6% on a year-on-year basis. But remember, what happened in the last quarter for Kotak Mahindra Bank? They reported good set of numbers, but during the results they said that the growth was largely driven by corporate banking, which is a little low yielding segment, and at the same time they also reported NIMs which were lower than what the street was anticipating, and credit cost which was higher than what the street was anticipating. So definitely we'll be watching out on these numbers, but specifically on the pre-quarterly updates, good set of numbers from the bank. Lastly, let's also talk about NBFC, Bajaj Finance. Now this came with a very good set of numbers. 23.6% growth is what it has penciled in for second quarter. Remember, they had already given a guidance of 23 to 24%. So it seems that they're actually acting at the higher end of the guidance. When we look at customer base, that has also increased almost by 20%, and the new customer addition, they've added around 12.2 million customers in this quarter, which reflects around 25.6% growth on a year-on-year basis. So definitely good set of numbers from Bajaj Finance, and as a result we saw market is also actually giving that to Bajaj Finance stock price. The stock is up more than 2% as we speak.
Indeed, and of a lot of these banking updates doing well for themselves, but slightly off the highs of the day, though, is Bajaj Finance, but doing fairly well, above the mark of 1,000 rupees. Gaurav, thank you for that. Now, the big story of the day has to be the revision in the CGHS norms, and that has led to all of these hospital stocks moving in today's trading session, and be it Apollo Hospitals, be it Fortis, and the impact on the hospitals, and that is visible in the price, of course, as you're seeing in the price action. Ekta is joining in to break that down for us, the norms and the impact that it has on the hospitals. Ekta, take it away.
Well, yes, hospitals are in focus because CGHS, which is basically the central government health scheme, which is for central government employees in terms of cashless payment in impaneled hospitals, their rates have been revised for the first time significantly since 2014. Now, the government has revised rates for nearly 2,000 medical procedures under the CGHS scheme, and the rate comes into effect this month itself. Many hospitals, or some of the hospitals at least, were refusing to take cashless treatment because of the receivables which were piling up, as well as the hospitals saying that the package rates were outdated and did not account for medical inflation since 2014. Now, hospitals say that this will be a positive change. They need to assess the revenue impact, but they are expecting cash flows to improve, and receivables, which have been improving, would probably sustain and improve going forward. Now, in terms of the companies or the hospitals that would be impacted would depend on the payer mix. For example, Fortis, CGHS revenue is around 4.3% in terms of the payer mix. Apollo, their exposure is around 9% to government. Max, institutional exposure is quite large at around 21.8%. Global Health is at around 18%, with CGHS probably hovering at around 10%. And Narayana is around 18% from schemes as well. And Yatharth too has a large exposure to the government schemes. It could be over around 30% in terms of the total payer mix. So overall, yes, it is positive in terms of the CGHS revision which has taken place. It is expected to improve cash flows, and receivables, which have been improving, should probably be on an uptrend for these hospitals.
All right, Ekta, thank you so much for joining us and explaining to us what this move means for the pharma and the hospital space. Let's slip into a short break. Up next, we'll focus on the crypto market with Manisha Gupta on the other side. Stay tuned for that.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and this Crypto Corner, we're talking about the Bitcoin price rise. Remember, we are trading at an all-time highs into this one. So 2025 is something to write home about, because not just that we've seen a string of all-time highs come in for Bitcoin, but we also have seen the overall market cap gain quite a bit as well. But let's start with Bitcoin first, and 1,25,000 is now done. With this, we've seen prices gain up by nearly 33% in this year, and it's a gain of 99% when you look at the last 1 year or 12 months therein. It also has to do with the spot ETF inflows. Remember, Bitcoin ETF was first launched in January 2024, and this is the second time in all of this time that you have seen such strong inflows come in for the spot ETFs there. So strong inflows coming in, institutional adoption has been great. The retail buying also has been surging, not just in Asia, but various parts of US and Europe as well. And the weakness in US dollar index overall in this year clearly has been a supportive factor. So when you look at 2025, it clearly has been buoyancy about precious metals, alternate asset classes, including cryptos as well. And then you have renewed concerns about potential prolonged US government shutdown. That in turn also seems to be supporting many of these alternate asset classes and non-fiat currencies as well. That is where crypto gets its support from also. If you look at the overall data, the on-chain data shows $1.6 billion of a surge in sense of buying. This mostly is coming in from the US exchanges, and there's a premium as well building up when you look at US vis-a-vis other global exchanges in sense of crypto. So you know where much of that buying really seems to be coming in from. And as I was telling you, the overall crypto capital market is now standing at $4.2 trillion. So clearly strong gains coming in for that. But it's not just about Bitcoin as well, because when you look at altcoins, the rally therein also has been breathtaking. So while we are looking at Bitcoin gaining by 98% in last year, take a look at what Ether has done, or Binance, Cardano, Solana. So it has been anything between 60% to 140% of gains in last 12 months in what we've done in sense of crypto. The support clearly comes in from optimism regarding potential tax reforms. We're looking at weak US dollar index in this year, down by nearly 9%. That has been supportive. And then it also has to do with fresh geopolitics, the buoyancy in diversification in sense of other asset classes, tariff uncertainty, questions on Fed independence are some of the factors which have been supportive. The markets also are looking at the data points really, because when you look at the last 10 years, in the month of October, Bitcoin has averaged a gain of 21 to 22%. This October, markets expect is going to be no different, and you could be looking at September, as it is called, continue in case of crypto there. There's an interesting statement or a report coming in from Deutsche Bank which says that by 2030, Bitcoin will perhaps join ranks with gold in many central banks' official reserve balance sheets as well. So these kind of very positive comments coming in from various banks and brokerages also has been very, very supportive. But that's all the time that we have on Crypto Corner. Go for a break, come back with more markets and stock-specific ideas.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. This week also marks an important milestone in terms of the primary market action. 7 IPOs, and they're going to raise a total of 30,000 crore rupees. The large ones will be Tata Capital, that's 15,500 crore. And tomorrow, you've got LG Electronics also opening. So today, let's talk about Tata Capital. I think as of now, day one, it's already seen about an 18% subscription. We had a chat with Rajiv Sabharwal, MD and the CEO of Tata Capital, to discuss about the company's growth, the strategy going ahead. Listen in to what he had to say.
We've been growing at 25% plus over the last few years. We believe India provides that opportunity of growing at that space. And it also happens because we are present in all segments. Retail and SME, which form about 88% of our book, itself grows at about 17 to 18% in the Indian credit market. And besides this, we are also present in the corporate space. So being present helps us. In terms of margins, I think our margins should be looked at with perspective to our credit costs. Our credit costs have been the least in the industry. If I take away the merger of Tata Motor Finance, Tata Capital has always had credit costs of below 1%. As far as the future is concerned, I think we've always looked at how we can add new products and grow them, which provide better margins. There'll be some products where through the raw material, the impact will be seen over the next 3 months or so. So I think we are really expecting Q3 and Q4 to be really bumper quarters for this year. When you talk about the credit quality and such issues, we've been pretty quick on responding whenever there were challenges. In fact, when we saw challenges in certain segments, we became tighter and more conservative. And that was reflected in terms of our growth in those areas also. As I mentioned just some time back, we feel the worst of credit cost is behind us.
It's 25,000 on the Nifty and continuing the gains that we had in the last couple of sessions of the week gone by. And the intraday high today is 25,016, which is near and about the 50% retracement of the fall that we saw from the highs of the 18th of September till the lows of the 30th of September, which was 24,587. Rachna Vaidya joins in for a quick chart check. Rachna, good morning. Thank you for joining in. At 25,017 and 25,113, how important are those levels for the index? And if we do go past it on the index, where do you see the Nifty going next? And your stock calls for the morning as well.
Yeah, good afternoon, and thanks for having me here. Yeah, as far as Nifty levels are concerned, I'll discuss the levels from the future as we trade into that. As far as Nifty futures October is concerned, we could see a resistance in Nifty futures at around 25,150 and not before that. So there's a good amount of chance that we could be rising another 100 to 150 points from here on. And that is a probable swing that can be played by today afternoon or maybe tomorrow as well. And as far as support is concerned, 25,000 on Nifty futures would be a strong support to be kept in view while trading the indices on the long side.
Got it. What about individual names, Rachna?
All right. As far as individual names are concerned, one of the stocks that you would keep in view is IOC. IOC futures are trading at around 153 as of now. And if one can go long into this with a stop loss of say 151.5, then we could be probably seeing levels of 155 and 156 and in another 2 days to 3 days of time frame. And another counter that I like to keep my eyes on would be TVS Motors, which has also given a strong good upswing at this point in time for the day today, which has a probability of continuing as well. So 3514 is the level of futures in TVS Motors as of now. If we can sustain our level of 3480 over here as a stop loss and go long, then we have a chance of seeing levels of 3550 and 3570 in this counter in another 2 days of time.
All right. Thank you, Rachna, for joining us and giving us a sense of which stocks and are in focus on the back of some technical moves. Let's take a short break. Up next, we'll discuss the market fundamentals with Devang Mehta of Spark Capital Private Wealth. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. We are above that 25,000 mark. So let's get in Mangalam. He's bringing us the latest trends from the F&O space. What's happening here, Mangalam?
Well, it's looking very good for the frontline indices. In fact, the Nifty has been driven by two major indices. We have the Nifty Bank, which is outperforming. It's up 0.75%. And alongside that, we have the Nifty IT index as well, ahead of the IT results. That's, an index which is doing extremely well, up around 1.5%. So when both of them power it ahead, we have the Nifty, which is holding above the 25,000 mark itself. And that's important because, on the one hand, you have heavyweights like HDFC Bank as well as Kotak Mahindra, all of them on the back of good updates powering the Nifty Bank ahead. There is belief that maybe there's some sort of valuation comfort coming in the IT pack as well. And in crossing the 25,000 mark, the Nifty has gone ahead and actually crossed important levels as well. Between 24,900 and 25,000, there were important moving averages. We had the 100 and the 20-day moving average. Both of them have been crossed on the way up in today's trading session. And the Nifty Bank too, with its over 400-point move today, has crossed past the 100-day moving average. Now what this has done is this has given bulls some support to go ahead and ride the 24,900 put. So we've seen some traction out there. So 24,850 now becomes the new base for the frontline index. However, 25,000 call writers are still fairly active in today's trading session. And what we need to see is whether the Nifty sustains above that 25,000 mark, closer to 25,050 or not, largely because the 25,000 call has a lot of open interest built up. In fact, if the Nifty sustains above 25,050, then all these call writers at 25,000 ahead of expiry tomorrow will have to cover their positions. And who's to say the Nifty can actually go up almost 100, 150 points from here on itself, provided it sustains at these levels. We've seen writing at the 2550 call as well, but there are a couple of points which do point towards some bit of overheating a little around that 25,000 mark. Why do I say that? Because one, even as the market's higher, the India VIX hasn't cooled off. So the India VIX is higher. And secondly, the put call ratio ahead of expiry tomorrow has moved to 1.3. This compares with 1.16. So it's moved to the higher end of this range. So until this moderates, we can't see a big spike upwards, but we'll have to watch out for that. A lot of individual stocks are fairly well bid today. So a lot of long positions added on Fortis, Nykaa, as well as Delivery. But keep an eye out on HFCL, Samman Cap and SAIL. All of them are flirting with a 95% market-wide position limit mark. If it does cross and close above that, then these stocks are likely to go into FNO ban.
Likely to go into FNO ban. Samman Capital out of the ban today, may enter the ban again. It's down another 6% today after that 5% fall that it saw on Friday. Perfect sell, the news trade playing out here on Samman Capital, 6.5% lower there on the stock. Devang Mehta from Spark Capital Private Wealth joins us now to take this conversation on the markets forward. Devang, good morning. Thank you for joining in. What do you make of these financials, the business updates that have come out? Loan growth in excess of 15% for most of the lenders who have come out, big or small. And is this the sign that loan growth in the system has finally started to pick up, bracing yourselves for a good second half?
Good morning. I think, yes, thanks for having me on the show first. And yes, it's good to see probably the festive demand coming back to the fore. And this was sort of predicted by a lot of people when government let loose a lot of things on GST. And secondly, I think also the income tax benefits which were given in the last budget have also come to the play. Yes, RBI cutting rates, enough liquidity into the system have also come to play. Finally, yes, financials, we have been sort of advocating the theme of credit growth. I know it's probably a lot of underperformance by banks over the last 3-4 years, which now seem to be probably having a little bit of pent-up demand for financial type of companies, which are banks, particularly private banks and NBFCs. Yes, the loan growth was quite encouraging, and I think this is just seems to probably be the start, because what happens is September, I think if the Navratri demand is probably something which people go by. I think that's just been of 7-8 days of demand last month, September. October, yes, has both Dussehra and Diwali. So probably the updates that would come in the January month of October, November, December quarter, there I think the positive commentaries, management positive updates, positive even numbers, I think that would start reflecting. My sense, it's too early to predict that whether it's time that the credit growth has come back with full force. Difficult to comment, but I think with the loan growth, with the deposit growth, with credit growth, all this coming back, Bajaj Finance, I think 24% AUM growth, HDFC and Kotak Bank in excess of double digit, I think Kotak particularly 15-16% are encouraging signs. I think as financials, all these companies can come back to the fore, the sentiment improving, the intermediaries will also come back. I think yes, positive so far. And probably markets have also gone through a lot of time correction for a year, and also a bit of 5% price correction since the September highs last year.
In that case, Devang, I wanted to understand what is the expectations from earnings this time around. The expectation was maybe we'll not see that strong earnings growth in this financial year itself, but Q2 has seen some updates coming back which have been positive. What's your take?
Markets will be positively surprised, Sonal. What will happen is everyone on the street was sort of saying that this quarter wouldn't be great, and I completely still agree with that. This will not be a great quarter. This will be a quarter where you will probably want to listen more to management commentaries and comments about how the industry is shaping up. The initial GST-led consumption demand, at least for the discretionary side of it. You also want to see execution capabilities and sort of order books for the capex-related companies, and also the banks as a space is again sort of gaining momentum. Typically, I think IT is where people have sort of receded their hopes, and that is where I think yes, most of these companies are at a 52-week low. So bad results would also sort of not give them a knock. But yes, maybe are they value buys? We still have doubts. But to answer your question on the result season, I think still I maintain that the third quarter numbers, the October, November, December quarter, which has already started, I think the numbers which come in Jan, Feb, March, there you would probably start seeing some bit of upgrades, because what's important is we are somewhere near the beginning of the end of downgrades. So my sense, this quarter should be okay, but next quarter we will start seeing sort of good results across all the spaces. That's I think the call that we are taking.
What about autos? Where, the festive season, everything that we hear from the ground seems to be that it's been a good festive season. The GST rates are really helping demand. But how much of that is already in the price? I mean, is it a buy right now, auto? And if yes, which one?
Yeah, Rima, I think very clearly the move which has happened, and I know it would sort of sound repetitive, is more structural, right? So what has happened is a couple of things which came down for the economy. One, very importantly, the GST-led demand resumption, or GST rationalization, if I can put it that way, that has sort of given ample headroom for people to spend, not only during the festive season, but I think whoever probably wants to sort of consume a little, sort of go up the curve, right, which is the theme, that what was earlier luxury is now becoming more and more necessity. So I think that demand is coming back, and that is demand which is more people going up the pyramid. So my sense that this is not going to be just a festive phenomenon. Of course, this type of sales you will always observe in India during the festive season, be it Dhanteras, be it Diwali, or be it Dussehra. But ideally, I think my sense tells me that there was a lot of pent-up demand for auto. I think if the pricing is going to be okay, and if the season continues well, if I think most importantly, if the monsoon which fared well, there is rural consumption which is coming back, and most of these companies also sell their cars now, even SUVs and hatchbacks and sedans in the hinterland of India and in the semi-urban cities of India. So my sense, yes, this demand is here to stay. Structurally, I think auto has sort of changed gears. Yes, short term we don't know. Yes, there have been a lot of run up in these prices, but companies like Maruti tend to benefit a lot.
Devang, there has been a rush of IPOs on the street. Have you looked at any of them? The recent ones, Tata Capital has opened today, WeWork opened on Friday, LG opens tomorrow, Canara Robeco opens on Thursday. Have you looked at any of them? Is there anything that you like among them?
I think, see, the general sense that I can give about it, I have not gone into detail of all of this, but the sense one gets is there is good quality paper which is coming to the market. Yes, of course, with good quality, there will always be certain qualities which will not be so great. But most of these companies are now coming to tap the market. There is enough and more demand for Indian paper. And you know that probably while we talk about the absence of foreign institutional investors, they've been probably buying some of these companies as even being anchors, or buying some of this IPO. And also Indian domestic institutional investors have been sort of lapping up some of these good companies. My sense that one needs to be selective, particularly advising for HNI and retail. One needs to be selective, can't just jump on the bandwagon because there are so many IPOs coming. But yes, mostly what I say is 70-80% paper which is coming to the market might still be offer for sale, where the promoters might be liquidating or the PE agency might be liquidating. So one has to do a lot of due diligence. But ideally, yes, if I think if I'm going to say one word, the quality of the paper is good.
Okay, all right. Devang, any other theme that you're liking currently in the market?
I think, yes, we've generally been bullish on two spaces. One, credit growth and capex now, with also consumption taking sort of a positive vibe. My sense is that a combination of three themes, capex, and why capex, still I know a lot of people probably talk about moving from capex to consumption, but the first mile proxy, right? While you do a lot of consumption related stuff, while your credit growth rises, I think corporates are going to expand on domestic centric stories. So a lot of this engineering related businesses, a lot of this semiconductor allied, a lot of power ancillary businesses, pure play stamping, lamination, casting type of businesses, even auto ancillaries, all these companies will also come to benefit. I know, yes, there was a hibernation period while consumption and credit growth started to go up. My sense this quarter will also be good for companies which are into capital goods, ancillaries, those type of execution, and order books are also, we are seeing a lot of ramp up of order book and execution capabilities also coming back to the fore. So my sense, yes, a little bit of capex theme should not be forgotten. These are also companies which will do well while consumption and credit growth do well.
Devang, thank you for sparing time and joining us today. Looking forward to having you more often on the platform. Take a short break. On the other side, on our special segment Under the Lens, Sonal focuses on the stock is Izmo.
Welcome back. It's time now for our special segment. All right, we'll get to Sonal and Under the Lens in just a bit. For the markets per se, continues to hover around the 25,000 mark, higher for the third day in a row. It's a 100-point gain on the Nifty. Banks continue to outperform. The Nifty banking index is up close to about 0.7%. IT has been a big outperformer. Let's pull up some of these large cap IT names to see the kind of gains. TCS is going to report numbers on Thursday. The expectation is muted, just about a 0.3% top line growth. But because of the INR depreciation of about 2.5% in the quarter, the company's margins may look better. So the expectation is that there will be some margin improvement. And also remember, TCS had deferred the wage hike. Typically, it gives it in 1st of April, then they deferred it, and that kicks in now on 1st of September. So even the margin impact because of wage hike is going to be split across the 2 quarters. So the street will watch for what they have to say about those 12,000 employees that they had to lay off, and also on H-1B visa. But as promised now, let's go across now to Sonal for our special segment Under the Lens.
Thank you so much for that. Well, the stock on my radar is Izmo today because that stock has been on quite a ride lately. If you look at the last 1 week, the stock's been under pressure. It's hit lower circuits for 3 straight sessions, down nearly 18% this week. But this comes after a massive run-up because the stock was up 86% in August and 90% uptick in September itself. What does the company do? It offers high-tech automotive e-retailing solutions across North America, Europe and Asia. Their client list includes some big global names: Sony, Audi, Nissan, Ford, Honda, Hertz, Suzuki, Renault as well. The business is spread across 3 key segments: Izmo Studio, which is their interactive media arm. There's Izmo Auto, which is digital retail and CRM platform, and Frog Data, which is an AI and data intelligence platform in the company. On the shareholding side, promoters hold about 35% stake. The public holds majority of the chunk, 64%, and there's no institutional holding yet. Let's take a look at the numbers. Revenues for Q1 FY26 came in at 57 crore rupees. For the full year, that's been steadily rising. 132 crores in FY22, then around 154 crores. It reached levels of 225 crore rupees in FY25, and in Q1, it has come in at 57 crore rupees. EBITDA stood at 10 crores in Q1. That was 39 crore rupees in FY25. Now, do remember, margins are currently around 17 to 20% for the company. Profit after tax has improved, 16 crores in FY22, rising to 49 crore rupees in FY25. But remember, that is largely led by higher other income in FY25 at 35 crore rupees. Return on capital employed, that remains modest, 8% in FY25, which compares with 10% earlier and 7% at FY22 as well. Let's talk about the commentary coming in from the management. Post Q1, they said that growth is being driven by new clients in the US and Europe, and the company has also entered the German market. They're guiding for 25 to 30% revenue growth in FY26 and are aiming to expand margins to 35 to 40%. Now, that's a big ask they have now. Another key update is Izmo plans to sell a stake in its AI arm, Frog Data, by the end of this fiscal itself. That is what they said in the conference call. They expect positive EBITDA contribution from new segments starting Q3 and Q4 itself. The company has also forayed into the semiconductor sector through its wholly owned subsidiary, Izmo Microsystems. They'll offer system and packet solutions from a new manufacturing facility in Bangalore, and they're targeting revenues of around 200 crore rupees in the next 3 years itself. A few concerns though. Debtor days, they've gone up to 161 days in FY25 from 110 days earlier. If you talk about the cash flows as well, cash flows from operations have declined from 31 crores to 4 crores in FY25. The company says the debtor days increase is because clients like Hertz and Avis, they are taking longer to make payments, and it's also linked to new business incubation cycles. On taxation, the management noted that tax rates remain low due to tax shields in overseas subsidiaries. India remains as is, but they have declined to share more details, calling it confidential. At current levels, the stock still trades 69 times FY26 earnings. Now remember, ROE, ROCE is weak. Other income contributed to a chunk of profit in FY25. Operating cash flows dipped sharply in FY25. Growth CAGR has been 17% for the 5 years. Yet it trades at lofty multiples due to hot sector presence, which is basically AI and chips. But does it have the competitive edge in these segments? Do these justify the valuations? That remains the big question.
remains the big question indeed. 86% in August, 90% in September. Well, Izmo indeed our candidate for Under the Lens. We'll take a short break and more on the markets on the other side. Stay tuned. Welcome back. Still finding some resistance at that 50% retracement level. So we have cooled off slightly from the highs of the day, ever so slightly. It's still 90 points higher on the index. The broader markets doing fairly okay for themselves as well as we wind down on this edition of Trading Hour from Arima, Sonal and me. Thank you for watching. Halftime report on the other side.